Morning, everybody. It's Thursday, July 3rd, 5:25 a.m. Central Time. I am going to run the quotes this morning, Matt, because things have changed drastically in the last 20 hours or so. December corn futures up 6 cents at 439.5. November soybeans up 6 at 10.54. December Chicago wheat up 1 at 5.85. December Kansas City wheat up 1.5 at 5.67.5. December spring wheat up 2 3/4 at 6.70. Matt Bennett is here this morning. Guys, let's start off with President Trump and where he will be and what he might be saying today.
So Trump is set to visit Iowa today to speak at the Iowa State Fairgrounds as part of the America250 Kick-Off Celebration. In a post on Truth Social, Trump thanked Iowans for their continued support over the past 3 presidential elections. He also stated that he would be sharing important updates on upcoming developments in agricultural trade. Tariff policy remains a key issue in the state, particularly among farmers and business owners. A study by Farmers for Free Trade, a nonprofit advocacy group, found that tariff costs for Iowa importers rose by 304%, an increase of roughly $68 million from April 2024 to April 2025.
All right, Matt, this Iowa speech is scheduled for 7:30 p.m. Central Time tonight. There is lots of speculation that Trump has secured and could announce multiple trade deals today. And that's, I think, what drove grain prices higher yesterday. The thing for me that's odd, I guess, is that Trump had this Truth Social post on July 1st, 2 days ago, right? And it's not like the Iowa speech is anything new. It felt to me yesterday at midday, somebody found something out, maybe some non-public information about a trade deal, and started buying, because we have rallied sharply in these markets. I mean, corn was up 11, 12 cents yesterday. Beans were up more than 20. Even wheat was up 11 cents. What are your thoughts?
I'm with you. It sure feels to me like, something out of the ordinary, has gone on, because I mean, you had to check this market for a pulse before yesterday.
Yeah.
Whenever the market started rallying, and I put a post out there, hey, the market's up 10 cents, corn market's up 10 cents. No, really, it's up 10 cents, because if you called someone up and said, hey, corn market's up 10 cents yesterday, and they hadn't looked all day, they'd be like, whatever, what are you smoking? But bottom line is, I don't know. In my opinion, someone knows what's going on here. The thing is, it's after the close today. You got a 3-day weekend, and some of these guys has been super short. In my opinion, they're probably like, man, I don't know if I want to take the risk here over a 3-day weekend. What if the forecast changes and we got to deal with China, yada, yada, yada. I mean, you could change the narrative on this thing a little bit very quickly.
China and India are the two countries being tossed around. And you got to remember, I mean, the last go around with Trump, I mean, yeah, we had a trade war, but then we had a trade deal, and China bought a ton of corn from the U.S. They bought a ton of soybeans from the U.S. That was really the catalyst, or one of the catalysts, for the bull market in grains that began like second half of 2020 and really ran through the entire 2022 calendar. It was like a 3-year bull market.
Absolutely. And it was a very good lesson for us too, Joe, because that didn't happen until the month of August. So not only did you have the China trade deal, you had the derecho, you had the war going on in Russia, Ukraine. But bottom line is, going into August, everyone felt like, hey, 2020 is going to be another year where we get kicked in the nuts. Basically, we're going to get smoked again on income. And then all of a sudden, if you sold before that rally, drastic differences in net cash farm income, just big time differences. And so, yes, I understand everyone's been looking at some of us saying, hey, good Lord, where are you guys at on sales? But to me, at this point, it's been really hard to get super aggressive whenever people are already underwater. Do I want to go ahead and get guys and gals selling a ton of stuff going in? Hey, things can change. And so I'm not saying that they have changed, but truly you got to understand this market can change on a dime.
Speaking of that, a quick plug for the premium deal. Matt and I discussed a lot of things yesterday. We did 20 questions with Matt in the premium stuff, and we had, I think, actually 35 questions from our premium subscribers, and they were all fantastic. All sorts of like super relevant grain marketing information. If you guys want to see that video, sign up for the premium stuff today. And also, we got a 3-day weekend coming up, Matt. Very often following these 3-day weekends, you'll see a shift in the weather. Pete will do a Sunday weather update. It'll be out at 6 p.m. Central Time Sunday night before the Open. So make sure to check that stuff out this weekend. All right, let's keep going with the trade topic.
The U.S. and Vietnam have reached a new trade agreement. On Wednesday, President Trump announced that American goods will enter Vietnam tariff-free, while the U.S. will impose a 20% tariff on Vietnamese goods. Additionally, trans-shipped goods through Vietnam en route to the U.S. will face a 40% tariff. U.S. agriculture stands to benefit from the deal, as Vietnam has agreed to purchase $2 billion worth of American farm products. Historically, Vietnam's top agricultural imports have included corn, soybeans, and wheat, which are essential for feeding its growing livestock sector. Vietnam is currently the United States' 8th largest trading partner, but it also accounts for the 3rd largest U.S. trade deficit, totaling more than $123 billion in 2024.
This is a nice feel-good headline, but I don't know that Vietnam is a big enough consumer of any of these items to really be like a market mover, needle mover type thing. Couple of statistics. Vietnam's corn consumption is estimated at almost 16 million metric tons this year. For comparison, China is 316 million metric tons. So I think that they could buy some grains, maybe in excess of what they typically do, but this doesn't feel to me like this is the market mover, you know?
No, I don't know that it's a market mover. I think it's kind of a sign, though, to the market that actually things are getting done.
Yeah,
Trade deals are
that's
getting
what it is.
done, and people are open to Trump's, I don't know, his strategy or plan, if you
Mhm.
will. Because a lot of people have said this guy's freaking lunatic. People aren't going to deal with him. Well, actually, people are dealing with him. I'm not trying to stick up for him. It's just whenever a trade deal happens, clearly something positive has happened there. And so I think that it was perceived by the trade to be a positive. But, I'm still with you. I think that there's other news out there, at least somebody thinks there is.
Oh, I think there's going to be more headlines along these lines with other countries. Maybe countries that aren't China or India will make deals also, and hopefully China and India make deals too. But they're very positive from a sentiment standpoint,
Mhm.
even though from a fundamental standpoint, maybe they're not big market movers. All
Sure.
right, let's get to weather, which of course remains a hot topic.
The U.S. Corn Belt is expected to see near normal rainfall over the next 7 days. Based on Euro Ensemble data, our friends at Crop Profit estimate that U.S. corn areas will see 95% of their normal rainfall over the next week. However, the central and eastern Corn Belt are likely to see drier conditions. The setup flips during the 8 to 14 day period when the eastern Corn Belt is forecast to see above normal rainfall. Above normal temperatures are likely to remain an issue. The weather models are mostly in agreement this morning regarding temperatures that run 1 to 4 degrees above normal on average over the next 14 days.
Do you see a weather threat here, Matt? I know that it has been a little bit dry in your neighborhood, right? And it's going to be for another week.
Yeah, I mean, clearly the Eastern Corn Belt would be um, probably the area that would be of greatest concern. I think when
Mhm.
you look at June rainfall, a lot of Illinois was shortchanged big time, and
Yeah.
so I'd say if this 8 to 14 comes to pass, you've got to feel a heck of a lot better. Now, the one thing, obviously, we've had some pretty extreme temperatures here recently, and in the next 2 weeks, a lot of this crop is going to be tasseling and trying to go through the pollination process. Now, as long as you've got moisture, of course, you feel a heck of a lot better, but excessive heat's not what you want during pollination. So I think that's one thing we really want to look at closely. For instance, when you come in here on Sunday night, are you going to have another dome type situation? Is this high pressure really going to move out, or is it going to set in? Because the last thing you want to see is high pressure whenever you're trying to pollinate.
I don't know that the weather forecast, like for the market today in a vacuum, matters a whole lot, but it could matter a ton come Sunday night if
Yeah.
there's any sort of big shift. All right, let's go to ethanol.
U.S. ethanol production declined last week, but remained strong. Weekly output of 1.1 million barrels per day was down slightly on the week, but up 1.1% versus the same week last year. Ethanol stocks remain well above seasonal levels for this time of year, totaling 24.1 million barrels. The print was down 1.2% compared to the previous week, but up 2.2% compared to the same week last year. According to Reuters data, U.S. ethanol production margins strengthened over the last week.
Matt, talk to me about ethanol plants, what sort of coverage they've got between now and say harvest, and what you're seeing on the basis front.
You know, I don't see them having a lot of coverage from now until harvest. Some folks may have, but there's no doubt those guys had massive coverage from that January, February timeframe all the way out till really June in a lot of
Yeah.
cases. And so, you know, what you're seeing on the basis front is a kind of a pretty big disparity between, for instance, that southeastern basis to the northwestern basis, the two extremes, right? So in North Dakota, some of the guys that we've got that work up there say, there's actually a fair amount of corn sitting around. Basis levels stink. You get over into Indiana, Ohio, and farther east, and basis is on fire. And this is one of the things we talked about in the premium content there on Wednesday. Uh, we had a guy last week that was telling us $5 corn is what he was getting for his cash, and that was in the state of Indiana. So there's no doubt. Well, of course, he's farther east, but regardless, you've got this massive pull of bushels that have to get to what's called a corn deficit area. So there's a ton of livestock, you know, mostly chickens, but some hogs, dairies that are out on the eastern seaboard. And so, you know, essentially they don't raise a lot of corn out there. I mean, they do raise corn, but they don't raise enough. And so it's a deficit area. It's already a naturally really strong basis level type situation. But last year, the eastern corn belt was dry as a bone. And so, and then this year we're having issues once again. I mean, I think that your eastern basis is going to stay absolutely hot as a firecracker, probably for the rest of the up until harvest. And so, I think after harvest, it could even be really hot still, especially if the Ohio crop ends up really struggling. Because let's face it, it had a horrible start.
Horrible start, and now they've kind of shifted drier. What kind of recipe is that? I mean,
It's terrible. I mean, the problem is I've been there, you know, and a couple of people asked yesterday about our situation. We're actually in really good shape compared to some of these guys. And the bottom line is, whenever you have to sit around and wait forever, maybe you push it just a little. Okay, so you go ahead and you plant into inclement conditions, and you're thinking, well, it's going to keep on raining, right? Well, then it turns off hot and dry. That's the absolute last thing that you want to see, because whenever you've been wet all spring, you don't typically have much of a good a root system. And so it's definitely been just an awful year weather-wise for them so far. We've got to hope that they get some regular rainfall, because I wouldn't wish the kind of weather that they've had so far this year on anybody.
let's go to the stock market.
So the stock market surged on Wednesday after President Trump's announcement of the new trade deal with Vietnam. The S&P 500 climbed 0.5% to a fresh record high. It's third in 4 trading sessions, and the Nasdaq also set a new record high with a 1% gain. Investor optimism around the Vietnam trade deal boosted hopes for additional agreements ahead of the July 9th tariff deadline. However, signs of a cooling labor market emerged as ADP data revealed that U.S. private employers unexpectedly cut 33,000 jobs in June, missing expectations for an increase of about 98,000. This morning's June jobs report will be closely watched, as it will play a critical role in the Fed's decision regarding potential interest rate cuts.
The S&P has been pretty incredible. We're now up 5.9% year to date. We're up almost 29% from the April low, which is a phenomenal move, up 12.5% over the last year. Matt, when you talk about asset valuations, okay, stock market's at all-time highs, housing, home prices close to all-time highs, Bitcoin's at all-time highs, money supplies at all-time highs, the national debt is at all-time highs. We've still got inflation. Is it time for the grain markets to join the high asset valuation party?
You would sure think so. At some point, you've got
It
to
would
look
be nice.
You've got to look at commodities, especially ag commodities, and say, holy crap. I mean, these things are devalued, if you will. I mean, if you look at inflationary type, what should inflation have done to prices of corn, beans, and wheat? They should not be where they're at today if you compare to other asset classes. And so if I'm sitting here looking at it, especially, you know, given the fact on the corn side of the equation, yes, I understand there's not a big crop, but overall, world supplies are not burdensome, first of all. Second of all, U.S. balance sheet, pretty freaking tight. And so if I'm looking at this, in my opinion, of course, I'm looking at this with a different set of eyeballs, but I would think at some point they're going to step in here and buy some of these commodities. But that's just my opinion. I mean, a lot of times what you see is people are going to say, hey, the equities have gotten too hot. Let's go ahead and pull back a little bit and move some of our money around to something else. Hey, you know what? At some point, commodities are going to have to get in on the party, in my opinion.
I mean, for the last couple of years now, people have been making this inflation adjusted argument as it relates to corn and soybean prices. Adjusted for inflation, we should be at $6 in corn or whatever. And it's just, that's all been an exercise in futility. One thing of interest with regard to the stock market, the last time we talked about the stock market, I talked about something our friend Jim Urio told me about how your political affiliation has influenced your investment decisions. And your buddy Jim McCormick from Ag Markets sent me this chart. This was a Gallup poll taken in the spring. Shares of Democrats and Republicans who expect stocks to go up in the next 6 months. And this was probably around the time that, like, the Liberation Day, like early April. Only 12% of Democrats said that they thought the stock market would go up, while 59% of Republicans thought it would go up. Stock market and investing long term should not be emotional or political, but apparently it was.
Let's pray this thing goes down so our party looks better. I mean, come on, you've got money invested. I don't get it. I mean, on either side of the ledger, but this happens both ways. We know that, but good Lord. Yeah. I mean, if you pulled money out and you just said it, 29% rally. I mean, what'd that cost you? A ton of money.
I'm going to tell you one of my theories that half of our crowd isn't going to like. I have a theory that that the left hates Trump so much because they sold their stocks when he got elected, and then it ripped for 4 years.
Yeah,
that would make you angry, wouldn't it?
I mean, election night, whenever he was elected, I mean, it was absolutely tanking, and people that bought that thing made a fortune, an absolute fortune.
What'd Cal do yesterday?
They bounced back. Live cattle were $1.20 to $1.90 higher. Feeder saw gains ranging from $2 up to $3.22. Box beef saw very little movement. Choice was down 74 cents at $3.94.86, while Select was up 25 cents at $3.80.31.
So is the Mexico border thing, was that considered to be bearish after we saw the headline?
I mean, yeah, if you're talking to me, I believe so. First of all, it's still, the fundamentals are still very strong, and the cash market strongest can be, and you've got less convergence with the board going down than what we were trying to achieve before, in my opinion. I mean, we're trying to get these markets to converge somewhat, but I just don't think you're going to see it happen, at least whenever you've got cash prices still at some of the lofty levels that we're seeing.
Outside markets are quiet this morning. Guys, have a wonderful 4th of July. We will be off tomorrow, of course. We'll be back Sunday, Monday. Matt, thanks for joining us. Have a good weekend, guys. See you.